I'm Josh Fenton, CEO and co-founder. A little news before we jump over to Zach Levesque from Northpointe. First up, a little scheduling notes. We're going to have a little diversion from constant coverage of the coronavirus at 11 o'clock. Brown University professor Hillary Levy Friedman will join us. She is really one of the foremost experts of beauty pageants, believe it or not. She's also the president of Rhode Island Now, as well in Rhode Island. Very interesting person, very interesting insights. Then at 12 noon, we'll be back with Dr. Fine. A number of developments have taken place, looking for his insights into those. Then at 1 o'clock, we'll be back with Governor Raimondo's briefing. She'll be updating on all the numbers in Rhode Island over the last 24 hours and implications of some of the programs she's implemented. Let's now go to Zach Levesque from Northpointe. Zach, thanks so much for joining us.
It's a pleasure. Good morning.
So Zach, everybody is financially concerned right now. You run one of the largest mortgage companies in Rhode Island. Mm-hmm. Let's talk about what's the sentiment out there, both from an industry standpoint and what you're hearing from consumers.
Yeah, two totally separate things, and most of the communication from consumers revolves around what's going on in the market, interest rate fluctuations, and on the industry side, the word that we're hearing over and over is the word fluid, which is essentially aggressive actions to negative implications in the market. So the market is very fluid, meaning as news is positive or turns negative, guidelines are being changed. We're seeing major rate fluctuations. And as with the stock market, the same thing with mortgage rates. When the economy moves and there's uncertainty, things happen very quickly.
And you've been at this for a number of years. You went through 08, 09. How dynamic is this in comparison to the so-called Great Recession?
Yeah, 2008. So I started in 2002. 2008 was the toughest period that I went through in this industry. I was younger. I feel like I know more and can probably dissect a little better than I could back in 2008. But 2008, it did happen very quickly. It was almost, saw some of these documentaries, Too Big to Fail on HBO, but it happened very quickly. And quite frankly, the music stopped. It turned very negative, and it was a prolonged period. This is different in many ways. It's also similar in ways. The market has been affected in basically all areas due to mortgage in the mortgage origination space. The question out there remains: how quickly are we as a country going to get through this? And that will really dictate how many more effects hit the mortgage market and the interest rate market right now.
Good news yesterday, and looking like good news in the market today. Yesterday, the Dow was up 1,600, almost 1,700 points. The market was up 7.7%, a nice bounce back on a Monday. Today, up again, looking up 4%, I think, in early trading. Yep. How does that help stabilize or influence the mortgage markets?
Well, anytime that the market and the financial markets are taking steps to be more stable, it's a good effect on rates. Does it mean that rates are going to go down? No, but 3 to 4 weeks ago in the bond market, we saw crazy movements in the 10-year Treasury, which forced rates up and down multiple times. So the stabilization of the stock market helps us in many ways. And at the end of the day, the more money that is being made in the market, the more usually discretionary spending we have, which ends up supporting the economy in numerous ways. So it's certainly good for us to see the Dow Jones go back up because, it went down pretty rapidly a couple weeks ago.
I think Saturday or Sunday, the Wall Street Journal had a piece about Wells Fargo sort of freezing jumbo mortgages, kind of getting out of that space, at least for the short term. What's happening in that space? Those are mortgages of more than $760,000. Is that correct?
It's actually, the Fannie Mae limit is in the low 500s, but it actually changes across different counties across the country. So your normal jumbo loan is above right around 550. They could go as high as $2-3 million. But what happens in times of uncertainty, and it all starts with bigger banks, Wells Bank, Bank of America. Generally, the smaller lenders usually follow the lead of the larger lenders. And since Wells Fargo is a conduit that buys loans from smaller mortgage companies, when they make changes, the derivative of that is a smaller bank making changes as well. So in times of uncertainty, what most mortgage lenders do is they limit their risk and liability, either FICO score requirements on certain products, and what that does is it helps them write potentially higher FICO loans, so they consider it more safe, or they just change guidelines so they're not accepting certain loans. I think we're in a stage right now where a lot of banks are affecting their liquidity, which is why you're seeing some of these moves.
What's the number one call you're getting from your customers?
The number one call right now is actually, should I refinance, believe it or not. So as rates went down pretty dramatically about 2 weeks ago, back towards historic lows. They're not at historic lows, but as the 10-year Treasury went down, rates went down with it. We're in a little bit of a refinancing boom, and not everybody can qualify. Some people are temporarily laid off due to the coronavirus. Some are potentially permanently laid off. So if you do qualify, it is actually a really good time to refinance. So most of the calls we have are, should I refinance? And a lot of the calls are people that we've either pre-qualified to purchase a home loan. Most of our business at Northpointe is people buying a home throughout the country. So a lot of the calls are, hey, I've been pre-qualified for you. I haven't found a house, but can I still buy a house? And people, due to lack of education on a national level, don't realize that it's still safe to buy a house. Lights have been changed to protect people, so that you have to have physical contact with somebody, whether you're buying or selling a house. It's interesting what has been done in the short term to protect the safety and rights of everybody out there in the market.
And if you were in the market 60 days ago to buy a house, how difficult is it to get through that process right now?
It's if you're working with a seasoned and educated, individual or bank or realtor, it certainly is a little harder. But given the fact that we're, if this pandemic happened 20 years ago when people didn't have the ability to remotely, people weren't on the road more, it would have affected us more. Quite frankly, we can get through transactions remotely. Most of our documents are e-signed. Appraisal guidelines now have been changed because of what's going on to allow an appraiser the ability not to go in the home to take pictures. So most of the loans that we're writing, I know it's crazy, but the federal government reacted quickly with mortgage guidelines. An appraiser right now on most products, not all, but on most, especially when purchasing a home, they only have to take exterior only pictures when they're doing the appraisal. So that protects the seller, and can feel confident that nobody have to come in their house if they have to sell it. And at closings, all of the attorneys are taking precautions. They're having buyers and sellers separately. They're having the buyers and sellers, when signing the documents at the closing, sign 6 feet apart. So it actually still is safe. Whether or not somebody wants to make that move now or wait for things to calm down with this pandemic is, obviously up to them, but it is safe.
I assume the most complex aspect of it is the home inspection, I assume.
Yeah, well, the home inspection, not all homeowners get home inspections done. A home inspection actually, and people don't realize this, is not necessarily a qualification of the loan. It's more a home appraisal. Of the home inspection is telling the potential buyer and the seller of the property if there's any inherent issues with the home. So the home inspection, although we do recommend it, is not normally required in the normal steps of a loan, but it certainly is a good idea to get done to protect all parties involved.
Zach, let's close on this. If I'm thinking about refinancing my home, I'm in the market to do it. Are you guys still staffed up at Northpointe to be able to respond to questions, deal with issues that I could have?
Yeah, we are, and it's a great question, and I'm glad that you asked it so that if people are listening, they know that banks like us are still operating. I can't speak for all banks, but the majority of banks, work remotely. As you see here, I'm sitting in my living room. It's actually the first time I put on a suit in 3 weeks, so I feel kind of special. So I appreciate it. But everybody is working remotely, and I have to say, in as far as my branch operation, skip the beat. And as a federally chartered bank, which Northpointe is, we can take applications. We're taking applications Rhode Island, Mass, Connecticut, because of this, mini little refinance pocket that we're in. So most of your banks, like us, are staffed up. We're ready to help, and especially given what's going on now, it might be a good time for people to refinance, to take advantage of a lower payment.
Zach Levesque, Northpointe, thanks so much. Really appreciate it. We've been trying to do these types of shows for a long time together. I think couldn't find a better time to kick these off. You'll be back next Tuesday at 10 o'clock. For everybody else, I want to thank everybody. We'll be back at 11 o'clock to discuss the future, the existence of beauty pageants, and then 12 noon, Dr. Fine, 1 o'clock, Governor Raimondo. Thanks everybody for tuning in.